last week we had an inflation number that came out, right? And market took off, made new highs. And I talked about it, and the Federal Reserve Chairman says everything is fine. Unemployment is low. GDP is not slowing down because of high interest rates. We're going to keep rates high. We're not going to cut rates maybe once this year. We're going to cut them and twice next year. So they kick the can down the road. It's an election year. I mean, when was the last time Fed raised rates in an election year? Never, right? I'm surprised that they're not going to cut the rates twice this year while the market's making all-time highs. But the consumer is saying something else. The consumer, me, you, all of you watching, and you're going to watch later. The consumer is saying that there is something called that the Federal Reserve brings out, the Federal Reserve Economic Information Office. It doesn't show that the consumer is confident. I mean, here's the charts, the two charts on the right-hand screenshot, as you guys can see. Consumer sentiment has been declining, and it's at a 7-month low now. Now, the consumer sentiment is something that we need to watch. Why? Okay? Because we're not a manufacturing economy any longer. We used to be 30, 40 years ago. We used to produce stuff. Now we're a service economy. And what does that mean? The consumer is 70+%, close to 80% of our GDP, right? In the previous segment, I said our GDP is $27 trillion, right? 80% of almost all that is consumer spending. If the consumer doesn't spend, economy goes into a tailspin, economy goes into a recession. That's where we are. That's where we put ourselves into, that kind of box, right? So consumer sentiment has declined for 3 straight months to its lowest level since November 2023. Well, on one end, the bigwigs are saying everything is fine. Inflation is going to be under control. Unemployment is low. GDP is still good. We don't have to worry about it. While the consumer is who we are, voting with our pockets and saying, man, this is not looking good to me. What if I lose my job? Should I tighten my belts and spend less money? I don't know. So the consumer sentiment index fell from 69.1 in May to 65.6 in June. Okay, well below. And then there's always expectations of 72%, right? And Americans' perception of their personal finances plummeted by 12 points to 79, the weakest since October 2023. Well, what is happening is that when the Fed raised the rates from 0 to 5%, there is always a lag in all of this, right? The effect of that showed up in our mortgages. If you had an adjustable mortgage, your mortgage is going through the roof now, right? Maybe the house is not going to be as affordable as you think it is going to be. Your credit card payments have gone up. If you bought a car or if you had an anything adjustable rate, right? They got all adjusted over the last 6 to 18 months, and now you're suffering, right? Your payments have gone up while your debt has remained the same. And what happens? The confidence goes down. We don't go out to dinners anymore. We don't spend too much money on vacations anymore, right? So consumer sentiment is tanking while the Fed is saying everything is fine. So you guys got to believe one or the other. I'm believing the consumer. The consumer votes with their pocket, and since over close to 80% of our GDP is consumer spending, watch out. People saying, there's going to be a soft landing. Fed is doing a wonderful job. I'm not buying any of it. And consumers' assessment of economic conditions also declined to the lowest level since December 2022. That's because of the lagged effect of these higher interest rates. Higher interest rates are taking a hold in the economy, and the consumers are suffering, right? I mean, I look at the Fed numbers today, actually, before I came on the live stream. The defaults on car loans, the defaults on credit cards, and this has nothing to do with income levels, by the way. At every level, they are at an all-time high. They're going through the roof, right? And this is supposedly with a good economy, right? And meanwhile, buying conditions for durable goods dropped to the lowest in 19 months as prices remain elevated. Yeah, because due to inflation, the manufacturers of all goods raise prices. Will they ever lower those prices? No. If history is a witness to what has happened in the past, is these companies raise prices, they lower it a few percentage points, but they keep it at an elevated level, and it's beneficial for them. That's one of the reasons earnings estimate in the market keeps going higher, because their profit margins are higher. And finally, consumers are feeling the pain of inflation. Absolutely. If any of you say that I'm fine with inflation, now you should be fine with inflation if you own hard assets, right? If you kind of own some real estate, yeah, we know what has happened to those prices. That's the inflation hedge. If you own some gold, if you own some Bitcoin, if you're in the stock market, I mean, look, the S&P 500 at 5,500, right? Who would have thunk? All-time highs every day. If you are in all that, yes, I will answer questions, Robert, at the end of the show, though, in about half hour or so. If you own all the hard assets, yeah, you kind of kept pace with inflation. Otherwise, inflation is chewing about 5 to 7% of your existing dollars that are maybe in the bank, maybe somewhere else, whatever. But if you're holding cash, you're losing value 5 to 7% of it every single year, and yeah, it's a problem. I mean, and one of the biggest parts of this, and that the Fed does not count, by the way, and this is part of the same idea, is that I have been in this country for over 30 plus years, right? And I never remember food prices going the way they have gone over the last. I mean, food is something we have to eat. We have to sustain ourselves. We don't have to go buy new clothes. We don't have to buy a new car. We don't have to buy a new house. Those major expenditures. We don't have to buy a new TV. We don't need a new cell phone, maybe, but we have to eat, right? And I thought I'd talk a little bit about this subject, that food inflation has absolutely gone through the roof. And to me, when the Fed says X food and energy, inflation is doing fine. The Fed, Mr. Powell, who doesn't eat, who doesn't use energy? I'm not sure. I'm not sure why, some of the CPI numbers do not include food and energy. I understand why. They say they're too volatile, right? They're going to kind of mess up our numbers. I'm going like, yeah, but I have to spend money every time I go to the market. I spend more and more money, and my income has not kept pace with that inflation. So how much have food prices increased in the US? Well, let's take a look. There's a chart. Again, these are facts. These are not hearsay. This is not BS. These are facts. We're all experiencing it out there. While overall CPI inflation grew 3.3% over the past year. Do you guys believe that number, by the way? Do you guys believe the 3.3% that the government says that what inflation is? I'm not buying that whatsoever, right? How about we double that, and then maybe we'll have a conversation. While overall CPI inflation grew 3.3% over the past year, most food items prices have risen much more than that. Yeah. Juices and drinks prices have seen 19.5% spike over the last 12 months, right? The most among all food categories. Frankfurters, bacons, we love our hot dogs, we love our bacon, have soared by 7.3 and 6.9%. Sugar, well, we're an overweight country because we love sugar. Sugar and uncooked beef roasts have also experienced significant hikes of 6.4 and 6%. So how's inflation 3.3%? Because the inflation numbers are X, meaning without food and energy, okay? And meanwhile, fast food prices, which all these companies are complaining now, right? They're laying people off. They're saying, oh, we can't keep fast food prices low and have employees that we're paying $20 an hour. How can you live for $20 an hour in California, right? But this is the thing that I don't understand. They lay people off and they blame the politicians for raising the minimum wage to $20 for fast food workers. Well, these people have to live too, right? They have to buy the same food that we're talking about here. So fast food prices are up 31% over the last 4 years. I agree. I mean, hell, you go to I don't know, let's go to your favorites, McDonald's or whatever. You buy a, Big Mac meal is $15 now. I mean, can you guys, hello, right? So inflation is hurting everybody. And, going back with this consumer sentiment that I talked about in this segment, valid, right? Inflation is hurting us. Inflation has not gone anywhere for the average consumer. For the people who own hard assets, inflation is not a problem. Why? If you own real estate, you can raise the rent, right? And somebody will pay for it, obviously. If you own gold, you're doing fine. If you do own Bitcoin, so far you're doing fine, kind of looking toppy there. But my point is, the average American doesn't own assets. 1% of the population owns 90% of the assets in this country. And that wealth transfer has been happening over the last 20, 25 years, 30 years. And again, I'm not a socialist. I'm a capitalist. I love what I do. Wall Street is, finance, all that good stuff. But all of us have to kind of see these, writings on the wall and act accordingly. And yeah, I mean, inflation is hurting everybody. And on the next topic, I'm going to talk about something that I haven't really talked about yet. But again, this is none of this, by the way, doom and gloom. These are things that I'm seeing, and I'm just trying to connect the dots, read the tea leaves of where the market is going to be, because that I trade, right? So that's me. Maybe none of you do, but then for me, it's important to see this big picture, read the tea leaves correctly, and then place my bets, for lack of a better word, in correct places. Okay, so you have to look at the microeconomy, you have to look at the macro, you have to look at the fundamentals, and then you have to look at the technicals, right? And once you put all this together, the big picture makes sense, and then you make an investment or not.